Hey guys, Darren here. Thanks for joining the Stock Market Options Weekly Update. This is for 9/11/2023, this Monday, tomorrow. So thanks for joining, and we are going to touch on where we're at in the market today with the S&P 500, what we did last week, as well as interest rates. We've got a decision coming this week from the Fed, inflation, general economic data, where we're going moving ahead. And then we're going to go through the trades that we have on the option trading platform. We'll talk about what we did last week, what we've got upcoming this week. There's a couple of earnings trades as well. And I think it's super important we understand how the rich are getting richer and how they're using options so that we can do the same. If you have not subscribed, please do that now so you're informed of future videos coming up, as well as please hit that like button. We want to get the video out to as many people as possible. Really appreciate that. If you have not downloaded the free options workshop, there's a link down below. It's completely free, and it talks about the way that we trade options. And disclaimer, I'm not a financial planner. Please do your own research. If you're new or learning options, I recommend you start small. With that, let's get started. All right, guys, so we started the week. We're looking here at TradingView, and this is the weekly chart. We started the week up here at, we started the week at 45.15, and we ended up at 44.57 down here. So we had, we were down a little bit over 1%, 1.28% for the week last week. We're now up overall. If we look at the annual chart, I like to kind of draw some trend lines, and depending on where you see this trend line right here, we're still above the market quite a bit. So we're up 14% this year. So we can look year to date as well. Let's see right here. We can go year to date, and you can see we're up 14% this year. So we're still at PEs of 18, so still high, a little bit high versus the 17 10-year average, but not too far off. If we look at the economic calendar, last week we had some numbers that came out, nothing real big, jobless claims. I don't think anything really affected the market as far as economic data too much last week. And then next week, we've got, of course, the Fed interest rate decision on Wednesday, September 20th. And we've got jobless claims coming out on Thursday. And housing starts earlier in the week on Tuesday, and home builder confidence index. We know the home builders, there's a shortage of inventory, so they're doing pretty well right now. But if we look at that CME Fed Watch tool, September 20th, we've got still a 92% chance that there's going to be no change next week. So we believe that's what is going to be the case. It's not until May of next year still that they would cut down to the 5 and 5.25% interest rates. That's the expectation, 39% chance in May. But other than that, it's staying the same, 5.25 to 5.5 all the way through May of next year. If we look at the different sectors, last week, since the market was down, pretty much every sector was down. Energy, oil still is going up, with our non-energy independence stance that is going to keep, I think, gas prices high for quite a while, at least until the election and any changes in, if there are, in the administration. But if we look year to date, we're still up pretty good. Communication, consumer discretionary, and technology is all up. If we look at the earnings insight report, and then this is one, FactSet Earnings Insight. It's free. You can just Google that and pull it up. Let's see. If we're looking at that, we've got Q3 estimated earnings growth of 0.5%. So it's the first positive growth since Q3 of 2022, so last year. The 12-month forward PE still is 18. If we go to page 14 on this report, we can take a look, and we can see that the Q4 analysts are projecting an 8.2% earnings growth and 3.7% revenue growth for Q4 of 2023. So that's actually pretty good. It's better than previous. And then 2024, we're looking calendar year 2024, analysts are projecting earnings growth of 12.2% and revenue growth of 5.6%. So that is also good. Things should be turning next year. If we look at page 31 on the report, this is another section I like to look at it on this report, but just the PE ratios of the different sectors. Let me enlarge this a little. And you can see the forward PEs. Energy is still, 12 versus 10-year, 15%. So I still like energy, even though we are at highs right now. It looks like it's not stopping anytime soon. Utilities are still fairly valued, 15 versus 17. They haven't done anything year to date. I still like, well, healthcare is a little overvalued right now. It's up there. But the financials, 13, yeah, they're fairly valued. So, at some point, early next year, the financials should come out of their funk and start to do much better. But with that, let's get right into the trades on the platform. So we've still got on the futures trades, the corn and the wheat, and these are both, long vertical spreads. So corn, we've got 12 days left, so a couple of weeks. 470 and above is where we're profitable. It is still at, pretty much annual lows, but if we look at the curve mode, I love this on the platform, then we can see the profit range in green, and above 470 we're profitable, and we're up at 483. So we're in good shape on corn. Wheat is a little bit of a different matter. We're down $180 on wheat, but again, it follows corn. It's at annual lows, so I'm still staying long, and we're at 595. Actually, we're right at the break even. So if I were to hold, I'd break even based on the amount of premium that we collected as time decays over the next 12 days. So we're going to stay long there. If we get a kick up in either of those and become profitable, then we'll look to close out. Analog devices, we're still in the range. We're 175. We've got the 175, 160 put spread, and then the 190, 195 call spread. And that's because I did roll up the put spread. You can see the profit range. We're still in the profit range. Analog devices kind of been trading in a range here. So if we look at the 30-day chain, we've made $126 so far in the last 30 days, but we're just looking over the next 5 days. We want it to stay above that 175 short strike, and then all this premium will make 122 minus 5, another $118 there, and we'll be in good shape. So we'll kind of watch that. If not, we could roll to next month, although IVR is low at 7.6. AMD, we've done pretty well on this. 5 days left. We've collected all but $71, 335. Just in the 30 days, it's like 114. I thought it was quite a bit more than that, but I know it's more than that. This may be off, but we're up 335 just on these trades alone, and we're right in the middle of that range. So that's kind of why I held on, and as long as we're not tested, I'll just go ahead and collect this next $71 in the next 5 days. Bank of America, the bank stocks have been down. We know with Bank of America, it's a great, long-term hold. Buffett's got a boatload of it, and I've got 2 Leaps options. If there were to be a big kick up in price, I might sell a call against it, although IV rank is so low. I've just got the leaps on right now. And, almost 2 years out, 495 days. Costco, I've got a pending trade in here. And you can see it's way above the market. I put it in at 296 on a $5 wide. I saw this opportunity when I was going over some trades, and it's got, decent IVR at 23. It's trading, up here in this range, but, there's support down here at the 520 level. So I have put on the 525, 520 put and the 580, 585 call. I'm looking to place this Monday when the market opens. It's $5 wide, so I want to collect at least a third the width of the strike, which $1.92 where it's trading at right now would give us. So Costco's a new trade I'm putting on next week. Then we've got DraftKings. DraftKings has done pretty well for us. Over the last year, I think we've done, over $1,287 over the last year just in trading DraftKings. But I've got the October $5 wide iron condor right in the middle. Oh wait, my bad. Let's see, DraftKings. Now we're on DraftKings. Okay, so we've got 2 leaps options and then 2 calls at 33 against it, and we collected good premium. IVR was up when I sold these. So we've got $292 in premium that we can collect as long as we stay, up in this range above the, up to that 33 level. We're pretty profitable. And then with the calls, we kind of even off right here. But you can see, we're just selling those calls, $1.11 for each of them. So pretty good premium, 111 times 2. $222 in premium there. But love DraftKings, especially with football season starting. Actually, today's the games. It's Sunday, so I'm gonna watch some of the games today, I'm sure. But end phase, we've got a 120-115 put spread on, so we're bullish in end phase. It is at lows. We're profitable. In this range up above, 117.5. We're at 120 now. We want it to stay above 120. And then, they do the solar, and they are at lows, but I think they're a good long-term company. Let's see what we've got next. We've got First Solar. First Solar's actually done pretty well. We've got an iron condor, 140, 150, 220, 230 that we sold. We're up $111. We've got 95 left to go. This is October, and we've done pretty well in First Solar, $379, and we just sold that for $2. So more than actually it's $10 spread. I went wider on this one and didn't quite collect a third the width of the strike because First Solar does tend to move quite a bit, but they've been trading in a range right now, and you can see some support here and some resistance here. So and IVR was high when I put it on. Now it's dropped, so that's the fact that it's dropped that allowed us to make, for some of this $111 to come in. Golding small gold stock, I'm gonna just pass that one. Google 130. I've kind of held on to this, but we're kind of at max profit. $11 left to make next week. It would be a shame if it dropped down to that 130 and I lost some of that. I should close that out. I kind of wanted to leave it on there as just a reminder. If it does drop below that level, I'm gonna roll and maybe put on 2 tranches for October. But Google's a great long-term company, and I think they're fairly valued, although they are up at the upper range right now. But I want to be long Google. I don't want to short Google. Lennar is one that's got earnings next week. I was looking to maybe do a $3 wide and collect $1. So still a third the width of the strike, but maybe a $3 wide in the same week, make a quick $100. I've got it in above the market at $1.80. Yeah, it's kind of calm down to a range here. We expect the home builders still to do decent because of the limited inventory. People can't get out of their homes and sell and go buy new ones when the interest rates are a little bit higher. They could, but they'd pay more than they're currently paying in interest rate fees right now. So um, Lennar is one I'm looking at for next week with an earnings trade. If you're looking at doing any of these earnings trades or any other trades that come up, please let me know in the comments below. I really appreciate it. The comments really help, and I like to know what you're trading and doing well in. Lowe's is another one. We've got a call spread on the 230, 240, and it's kind of at highs, and that's why I put it on. But you know, with people staying in their homes, they are, you know, using Home Depot and Lowe's more. So although they've gotten robbed recently with the situation there, so that's not good with retail. But I heard there's billions in losses in burglaries. But 230, 240 call spread, I'm going to leave that right now. Once we enter, you know, the full bull market, I'll either trade both sides or take this off. But IVR is so low that I'll probably close it out at some point if there's a drop. Medical properties, we own this one, the outright stock, because there's a huge dividend. We've talked about this one before. There was an article that came out. They've got 2 hospitals that are having trouble paying their bills and financing, and this is a real estate REIT and also healthcare. But I don't think they're going. I don't know if they're too big to fail, but they're the largest of the healthcare hospital REITs, and I think that they will be okay. So that's what I'm betting on. I'm not going to sell when they're down at this point at, you know, the lowest they've been, 6.64. I'm just going to hang on and collect the dividend and wait for them to come back. Palantir and actually medical properties, with those 2 hospitals, they're actually picking up shares of the hospitals and ownership. So when they do come out, you know, they're obviously giving them some leniency with the payment terms, but as everything improves, they're going to own more of the hospitals and even do better. So that's kind of my thinking on medical properties. Palantir, they've been trading in a range between 15 and 20. 14 and 20, and they're down at 15 right now, so I'm a little bit long. I've got I've got a put option that we sold, so that's a long position, as well as the leaps option. At this level and low IVR, I'm not going to sell a call against my leaps and you know, cut my profits. I'm just going to stay long at this point. PayPal, good long-term stock, October 65 put spread. Let's see. So for PayPal for the year, we're down a little bit. Yeah, so we've got some room to make up there, but 60-65 put spread, down $31 on this trade. I like PayPal long term, and yeah, they're at lows, and they're a good company. So I'm long PayPal. I'm going to leave that one. The Qs, we've done pretty well with 380, 385 call spread, and we're up $104 on this. And we've done pretty well in just the last 30 days. 130 bucks. But the Q's 380 to 385 call spread, 5 days left. We're at 372, so we're well within that range. Assuming the market doesn't jump next week and technology take off. Otherwise, I will just roll that out further. But the Qs as well as SPX are 2 that I kind of hedge against the market, against my long positions, and I sell those so that on down days, I still am able to profit on those down days. SMTC is a semiconductor stock. I was looking at doing a strangle, maybe collecting $1 to $1.50. I've got it in there above the market, but they've got earnings next week. And SMTC, yeah, right in the middle of their 52-week range. So that's one. And IVR is high at 52, so we can collect good premium. So that's why I like SMTC. So I'm going to be looking at that for an earnings play next week. SoFi, way down, 8.5. Great online banking, lending stock. And, we've got basically we're controlling 1,000 shares, 7 leaps options plus 300 shares outright. We're down a bit, but SoFi I'm not worried about long term. They are going to do great going forward. SOXL semiconductor, I rolled that out to October. IVR is still a somewhat low. It's a little bit frustrating because the IVRs are so low right now that it's tough to collect good premium, but we're going to do what we can. That's why we have more in cash right now. Should there be any further drop in the market or increase in IVR, then I'll put more on. But we've got a 2320 put spread in SOXL, the semiconductor ETF. And then Teladoc, I think good long-term as well. We've got a 15 leaps option. We've talked about this one before and done pretty well. I'm going to come back to SPX because I made some trades there last week. 365 chain, let's see. If we look at Teladoc, 365, yeah, $850. So we've done pretty well over the last year in Teladoc. TLT and Teladoc is still, way at lows, and they're a good healthcare company. They've picked up and purchased a lot of companies as well. We've got TLT 30-year bonds are at all-time lows. We're profitable above 94. I just rolled that, but you can see we're at annual lows, and we just made a little bit of money from last month, I believe. Yeah, in last 30 days, not much, 22. But I trade bonds a little when IVR is up, but not too often, and IVR is only at 13. So when I started trading this TLT, it was higher. Toll Brothers, another housing stock, 85.80 call spread. I'm betting against these right now. I'm not sure I'm going to be successful with that, but we'll see. Verizon, we own 100 shares outright, big dividend. I like Verizon going forward. Still at kind of annual lows. So that's a good play and gives some diversification. And then Wells Fargo, we've got as well long term, have done pretty well in that, even though it hasn't moved a lot yet. So let's go to SPX and finish up. I'll tell you what we did. I put on a few trades last week, and I will go right over to the option chains for the 30 days, $1,480 in 30 days. And that is pretty much just betting against the S&P 500 moving down. So what I did last week, I'll just kind of walk you through it. So we had a short week. So on 9/5, Tuesday, I sold the at the money $5 wide call credit spread, collected $255. Then the market closes. I'm in California, so the market closes at 1 p.m. Actually, SPX actually trades to 1:15, I believe. But I always close out or roll at, just before the market closes. I try to. And I closed out for 90 cents. Typically, I would roll, but I decided I'm just going to take a $90 loss on this because it's less than 100. I figure, rather than double up and go, in order to collect a premium, I would have to roll to the next day and double the width of my strikes because there's only $5 wide strikes. So I'd have to go $10, and I didn't want to put on that risk. So I just closed it out and then did the $5 wide on the 6th. That one did not, the market moved up. So I actually rolled out, and you can see here to the $10 wide, 44.60, 44.70, and collected $1.55 on top of the 250. So now I am so on Tuesday I collected the 255. I closed for the $90 loss, and then I rolled for 155. So now I'm at 405 minus the $90. Um, well, I'm going to keep walking through it here. This is confusing. This is the deal with SPX, but I think I'm up 285 on these trades right here. I'm up 165 on these. Okay, this makes sense. So 165 here, 285 on this one, and then um, I closed that $10 wide for $1.20, so I was up 285. And then on Friday, I opened up the 255, sold that, bought it back for $1.25 to make 130. So last week in total, we made 165 plus 285 plus 130. So we did pretty good last week in SPX, trading it that way, just rolling to the at the money and closing. So I'll keep you updated on future SPX trading, but I do like that strategy as far as going against my long positions. And with that, I think this one was a little bit long today. I'll try to make it quicker and shorter next week. But please, if you have any comments, let me know. Any questions, I will answer every question. I'll be coming out with more videos during the week, so please subscribe, like, get that free options workshop. I also do coaching. You can link to down below. As of October 1st, the fee is going to be going up a bit for coaching, so book it now. And look forward to talking with you. And thanks for watching. See you in the next one.